Bitcoin is below 70,000 US dollars. Money is also flowing out of the precious metals market. Yes, gold is now at 4,270 US dollars, silver below $64. So you can see the movement of capital is slowly beginning. And let me put it this way. I got up early today and my first look was at the bond market and it looks catastrophic. So this week could get really, really wild. If we now get some kind of crash in the markets, including bonds that keep rising and possible interest rate hikes, then the market is really, really cooked. And with that, welcome to a new crypto update video. Yeah, actually, it's not as positive as I sound right now, but you have to bring at least a little bit of cheer on a Monday morning so that you're motivated to watch the video all the way to the end. We definitely have a lot to talk about. There is no new information regarding the Iran war, so Trump hasn't commented. The deadline will expire in the next few hours or over the course of the day. Otherwise, energy infrastructure will be attacked, which according to Twitter has supposedly already happened. We've definitely reached a level of escalation that is no longer a joke and that, could push the entire global economy to the brink of madness. We'll take a look at all of this. Before we get started, as always, feel free to leave a like on the video, subscribe to the channel if you haven't already, and of course, join the free Telegram talk and Signal group. If you're interested in updates, news, and signals, you're welcome to join. You'll find the link for that for free down in the video description. Everything is, of course, for free. All right, let's get started. Bitcoin, as mentioned, is at 68,500 US dollars. You can see exactly when Trump opens his mouth, and that's what he did here by saying, yeah, Iran now has 48 hours to reopen the Strait of Hormuz, because if not, then the energy infrastructure or possibly some nuclear facilities will be attacked. And if we take a look at the markets, stocks, bonds fall as UN rhetoric intensifies. Yeah, it's not just rhetoric. Apparently, the energy infrastructure was actually attacked a bit. That's obviously not so great. So a lot of capital is flowing out of gold for now because gold is ultimately intended more as a safe haven. Of course, you could argue, yeah, but the markets are falling and all the futures are deep in the red and so on. Yeah, basically that's true, but I'd say the markets care a bit less about gold at the beginning. Otherwise, as I said, the headlines everywhere are still completely dominated by Iran, Trump, and all that. And the next topic that's coming up for us, Goldman rises oil forecasts on largest ever supply shock. Yeah, that's right. Oil is actually still sitting at $99. That's too high, folks. Way, way too high. But that's not really the problem either. Well, it's one of the problems because if oil keeps rising, we'll have global inflation, job cuts or layoffs, a labor market recession. It's all connected as long as the Strait of Hormuz remains closed. But the next point is this, and it's much, much more important. And I've been warning you about this for 2 or 3 weeks now. Global bond yields climb as Iran war upends rate expectations. Yes, the global bond markets are slowly getting out of control, and that's why the first thing I did this morning when I got up was check the bond markets. And yes, there's already a new high at the start of the new week. The previous high was briefly rejected, just under 4% for the 2-year bonds, 4.05 for the 5-year bonds. The 10-year bonds, which are very, very important for buying houses and for loans, are now at 4.4%. The market is cooked completely. If things don't calm down somehow over the course of the week, well, congratulations, because the 20-year bonds are already at 5%, while the 30-year bonds are at 4.9%. So the 30-year bonds are worth less than the 20-year bonds. Something is definitely wrong here. And if we see this happening with the 2- and 5-year bonds as well, oh shit, then that's it really. At the same time, the chances of a rate cut in April are very, very high, and they're increasing every day. Yesterday during the live stream, we were at 12%. Now it's at 14% for a rate hike, and that's still not all. Let's take a look at June. Suddenly, the 4 to 4.25% range is already priced in, meaning an increase of 0.5%. Yesterday it was 1%, now it's already 2.8%. So you can see the longer we go up, the higher the probability, even in July, as you can see here, of an increase by even 0.75% over the coming months. The market is having extreme problems and things could really, really go wrong this week. Bitcoin, and I think I mentioned this yesterday as well, is still holding up relatively stable, I would say, considering the whole situation. Let's take a quick look at the spot order book. This is not what I would wish for at the start of the week. So we had a brief drop last night where spot was bought up again, but now as soon as we're back at 68.9, 10 to 20 million in spot is being sold again. Let's take a quick look at how block. Yeah, we still have this big wall at around 76,000 US dollars on the weekly view. Short term, 66K, but I mean the biggest clusters, if we still look at the monthly time frame, that's where most of the liquidity is after all. That hasn't changed much, namely below us at 64, 60, 56, 57K. That's where the liquidity still lies. The funding rates, yes, they're negative, but if something bigger happens today and the markets take a complete nosedive, because I think the South Korean markets are already down 5 or 6% again, Nikkei is down 4%, they're really, really bleeding out. It's only a matter of time before Bitcoin or crypto will follow. At least that's my opinion. Let's wait and see, but it doesn't really look bullish. My plan remains unchanged. Down, as I said, I actually want to go at least into the 60K region, and then from there somehow build a swing position and eventually move upwards. Let's see in the end if that works out, but as I said, the signs aren't bad for us to keep dropping. The bond markets are out of control. By the way, we're seeing a slightly stronger dollar. So, carry trade risk could still be ahead of us. Right now it's a bit less again, but as I said, keep that in the back of your mind. Let's wait and see. Let's take a look at the altcoins. Ethereum and Solana are both crashing. Just last week, it was still altcoin season. Those were good times. And in the end, last week, we took a look at Tau, where I told you, please take profits. We went back up to 5, where many people went short, myself included. And now we've dropped back down to 270. So that's another 10% drop. Take it. That's really the only sensible thing to do at the moment. If any altcoins go up by around 60 or 70%, take it, take out your initial investment, and that's it. Just let the rest run, because the next crash will definitely come sooner or later. Before we now turn to the Forex and stock markets, just a quick reminder, you can register with BingX using the link below in the video description. At the moment, there's even a VIP 2 bonus available for 1 month. That means you get lower fees, extra events, and at the same time, if you register and, for example, deposit 500 USDT, you'll also receive a 120 USDT voucher, which you can then use in the end. Of course, the more you deposit, the higher the bonuses will be. Feel free to check it out. The promotion is still valid for 24 days and 16 hours, so you still have a few days left. Just sign up using the first link in the video description below and you're in. All right, let's move on. Let's move on to the traditional markets. As I said, first of all, Forex, DXY, so the dollar is rising, a very, very good sign. The yen, on the other hand, is falling. That eases my fear a bit that the carry trade might also blow up. That wouldn't be so good this week, because then we'd have double or even triple the problems. Because on the one hand, you have the bond markets, on the other hand, the stock markets, which then fall, and then an even stronger dollar or a weakening dollar with the carry trade. That's a mix you definitely don't want to have in a week like this. Definitely not. Trust me, bro. Then the euro is also slightly declining again, which is a reassuring sign also in terms of the carry trade, because if the carry trade is intervened in or unwound, then the yen and euro rise since the dollar then falls. And a lot of government bonds end up being dumped on the market, which in turn still explains why government bonds are rising so much when a lot is possibly being dumped. It's still a bit early, but as I said, keep that in the back of your mind. Then let's move on to gold. Gold is experiencing a complete sell-off. As I said, times of crisis are still present for now, but gold is one of the first things to be liquidated before a bigger crash happens, before we see money flowing back into the Nasdaq or similar markets, or before investments are made there again. I still believe that as soon as the carry trade picks up again, gold will also have its moment, and we'll see gold at around $6,000 this year. But remember, our old zone, in the end, if we look at the daily time frame and take a look at it, that area has always been in play for us, or at least for a longer period. 1, 2, 3, the third one is very, very extended, if anyone still remembers. For me, the fourth is still somewhere between 3,600 and 3,500, but I've made the buying zone a bit larger because physically I'll slowly but surely start buying again from $4,000. We're still a bit away, but it could happen faster than we'd actually like. It's exactly the same with silver. We're now in the buy zone. Here too, we're currently seeing a bullish divergence. I'm going to wait another day or two here. For me, this is clearly a buy zone, but more in terms of a long trade. I'm going to wait a bit longer here, just because we're now in the buy zone and have tested the pivot. Because down here, we still have a small inefficiency that goes down to about $54. I'll let you know if I enter any long positions here. As of now, I haven't done so yet. Besides, it's Monday, so I'm being extra cautious anyway. Let's move on to the traditional markets. The DAX looks catastrophic. The DAX also lost its support last week. For me, the next level for the DAX is around 21,000 points. So if you're still holding your short position, happy profits, let it run. Dow Jones, yes, is deep in the red in pre-market trading, but it's just barely holding its support. It gets critical if we lose the 45,190 point level. Then it's good night. And as for the Nasdaq, well, what can you say? Catastrophic. But as long as bond yields and oil prices keep rising like this is just the beginning. Then it's going to go much, much lower, and I hope each of you has cash ready to buy the dip in some individual stocks. S&P 500, 6,500 points. Pre-market now at 6,465, so another deep red start for now. The level of escalation has been reached, or rather a level of escalation that no one wanted to see to this extent, I would just say. And this may only be the beginning. The bond markets have gotten out of control. The dollar remains very, very strong. Stocks are being sold off. If in the next 24 hours something happens because of Trump or Israel or any other countries, like an attack on energy infrastructure or possibly Karg Island, through which 90% of Iran's oil trade passes, then good night, markets. Then this week we'll probably finally see our volatility index rise above 30. Manu is happy. We're getting a complete drop. Manu is happy, and hopefully you are too. And then it's time to buy and possibly start a long position in the stock markets as well. It's going to be a very, very exciting week, friends, and I'm looking forward to it. I'm curious to see how it turns out, and of course I'll keep you updated even if I get into any stocks or something like that. Things like Palantir, etc. we discussed in detail yesterday. Let's just wait and see. But otherwise, I would say you should now be prepared for today. As I said, keep an eye on the bond markets. Bitcoin is dropping again right now. Gold, as I said, don't go long. I wouldn't recommend it to you. I am long myself, but I have a bit more of a buffer, so to speak, so I can sit the whole thing out. And silver is also completely crashing right now at $61. Keep your hands off it. Wait, just pay off today first. If you're short, take profits, very, very important. And otherwise, just wait for the opening. Less risk today. Otherwise, as I said, I wish you all a wonderful start to the day, or rather to the week. We'll talk again tomorrow. Until then, ciao, ciao. And as always, stay greedy.